November and December 2020 edition. So we could not conduct the roundup last month because of Diwali clashing with our roundup date. We started this roundup series in January 2020, and thank you very much for very encouraging response. Uh, the roundup has been widely appreciated both in terms of format and content, and a large number of participants join in every edition. Uh, so today I'm joined by my colleague Ayush Agarwal, and we'll be starting today's session now. So in today's session, we'll be discussing e-invoicing because the government is widening the ambit from January 2021. We'll be discussing recent news and we'll come to the precedents. Many important rulings have come up in last couple of months, and we'll close our session with live question and answers. Starting with e-invoicing. So before we start e-invoicing, it's important that e-invoicing is relevant for each one of you. You may be a supplier who is required to issue e-invoices. Secondly, there are many ITC issues also for recipients which needs to be taken note of. And from a government perspective, because the government is now widening the ambit of e-invoicing, eventually the government intends to cover all B2B supplies into that. So it's another step towards digitization and formalization of economy. Coming to the e-invoicing, in September 2019, the government GST Council approved the schema. In December 2019, the relevant rules were inserted in CGST rules. The electronic portal for preparation of e-invoice was notified. In October 2020, it started with taxpayers whose turnover is more than 500 crores. From January 2021, all taxpayers whose turnover exceeds 100 crores will be covered. And the government's wish list is that from April 21, all B2B transactions should fall under e-invoicing ambit. Very important to note, what does aggregate turnover means? So aggregate turnover is turnover as per GST law. So whatever is a turnover or amounts you are declaring in your GST returns for your outward supplies, that will be treated as aggregate turnover. Second important aspect is that the aggregate turnover for threshold of 100 or 500 crore can be in any financial year from 17-18 onwards. So from 17-18, 18-19, 19-20, if we are talking about January 2021 changes concerned, if in any of these years your GST return turnover exceeds 100 crores, then you are required to issue e-invoicing. Under GST law, aggregate turnover comprises of taxable supplies, exempt supplies, non-taxable supplies, and even exports. So, one of the major point which you should note is that because the government is taking GST turnover, so it may happen that your actual turnover is 40-50 crores also, but because of stock transfers or your nature of business, so suppose you have a factory which clears goods to different warehouses, etc., and they are located in different states, so their respective turnovers will be counted. So even the taxpayers whose books turnover is 50-60 crore may actually fall within its ambit. So the ambit is going to be very, very wide in times to come. And yes, ERP integration and technology upgradation is a major challenge because the taxpayers which we are talking about now are having turnover less than 500 crore, who do not make that much investments in IT infrastructure, etc. So the technology part will be the biggest challenge for all such taxpayers. Some of the important points for consideration are that e-invoice will apply for exports as well. It is not required for self-invoice, which is required for reverse charge cases. Taxable charges needs to be reported through separate line items, e-invoice. Other charges, etc., which do not form part of taxable value needs to be covered, needs to come under the head other charges. There is no time limit for generation of IRN. There is no need to carry physical copy of invoice while movement of goods. During movement, QR code can be produced for verification if intercepted by authorities. Once an e-invoice is generated, it can be cancelled within 24 hours on IRP portal. The document cannot start with 0, hash or dash. It cannot have alphabets in lowercase also within the invoice number. Once IRN is cancelled, same document number cannot be used again. Now coming to QR codes, how does QR codes work? So if there's a taxpayer who is presently covered under e-invoice ambit, for B2B transactions from October 1, 2020, he needs to generate IRN and QR code through IRP. And QR code contains all details like GSTN, invoice number, IRN, etc. As far as B2C transactions are concerned, from 1st December, QR code was mandatory. It was required that dynamic QR code needs to be printed on invoice. But yes, the government has waived penalty under section 125 till March 2021. But yes, what they have waived is the general penalty under the CGST Act. For some reasons, the government has not waived the penalty under section 122, which deals with correct issuance of invoice. Coming to the process briefly, which will be relevant for the taxpayers who will now be coming in the ambit. From a seller perspective, he needs to generate a JSON of invoice in own ERP. The invoice must contain mandatory particulars as per INV01. The seller needs to align its software so that JSON can be generated. He needs to upload generated JSON on IRP portal. IRP portal generates IRN and QR code. It digitally signs the invoice. It removes the duplicate entries. It compares with stored IRNs in its repository and then shares final JSN back to the seller. E-way bill is automatically updated with these details. GSTR1 is also updated with these details. Important to note that the functionality of GSTR1 updation hasn't begun yet. The government has promised that from 13 December 2020, this updation will commence. Now, the invoice can be printed along with QR code. So, what is the solution? The seller's ERP needs to interact with IRP for uploading invoice details, and IRP needs to share IRN and QR code. Two possibilities are there for every taxpayer. Either they use a middleware like a ASP GSP software solution, or they can directly do it through NIC portal. We'll be shortly coming up with a detailed video as to how these two solutions work, and so that the taxpayers can make an informed choice how to implement in their scheme of things. Now let's compare middleware versus NIC portal. What are the advantages and disadvantages? As far as middleware is concerned, the limitations are that there's a need of ERP change if API has to be integrated. It has its own development time, cost, and on the advantages, it's a totally automated system with no or minimum human errors. The taxpayer can generate MIS reports. There's a bulk downloading facility as well. And IRN and QR codes will be generated on a real-time basis. As far as NIC portal is concerned, it's a manual exercise where the taxpayer needs to feed relevant details on the portal and generate IRN. No MIS reports, no bulk downloading facilities available, and the invoice is generated in a fixed format only. On the advantages, there is minimal cost. The e-invoices are directly generated. It's very useful where the number of invoices are lesser. Now we'll come to today's poll relating to e-invoicing. So we are launching a poll. Yeah. So we have launched a poll, and the poll question is in front of you and the options, and we'll wait for 10-15 seconds, and you can choose an option which in your view is a right reflection. And so the poll question is, if e-invoicing is applicable on you from January 2021 onwards, are you technologically ready or not? So the options are yes, no, and not applicable. So we'll wait for another 5 seconds. So we request you to exercise your option. Yeah. So we are closing the poll now, and we'll be displaying the poll results. So the poll results are 72% participants are ready. That's a very good number. To 12% participants, they are not yet ready, and to 16% it's not applicable. So it's very heartening to see that the industry-wide preparation for e-invoicing is very good. We'll move ahead. Now, from an e-invoicing perspective, it's important to know what are the issues for claiming ITC. So if you are purchasing goods from a supplier who is covered under e-invoicing, so the first issue is that possession of e-invoice is mandatory for ITC availment or not. So let's take a scenario that you are purchasing goods from a supplier who is covered under e-invoicing, but he does not issue e-invoice. So say for example, his turnover was exceeding 500 crores, or say from January 2021 it exceeds 100 crore, but he doesn't follow the prescribed procedure for generation of IRN. Now Rule 48 sub rule 4 prescribes manner of preparing e-invoice. Very important to note that as per Rule 48 sub rule 5, if invoice is not issued in prescribed manner, it's not an invoice. So if your supplier was supposed to issue an invoice and he doesn't issue that, then it will not be treated as an invoice. Now from a recipient perspective, one of the mandatory conditions for availing ITC is possession of tax invoice. So if your supplier has not issued e-invoice, so his document is not invoice per se, then from a recipient perspective, this condition of possession of tax invoice is straight away violated. Now, very important to note is that as a buyer, is there a way in which you can ascertain whether your supplier has issued e-invoice or not? So frankly, the answer is no. So you can go to the government's website and check the list of suppliers who are required to issue invoice, but thereafter for that particular document or for that particular transaction, whether he has issued IRN, there is no way in which you can assess. So if you cannot check whether your supplier has issued e-invoice or not, then having this condition in law is expecting you to do something which is impossible. So in our view, this condition can be challenged because from a recipient perspective, it's impossible to comply with. And it's similar to the condition of claiming of ITC, where one of the condition is whether supplier has paid tax or not. So even that finds mention in section 16. And even today for a recipient, there is no way in which he can concretely assess whether his supplier has paid GST or not. So in our view, this condition can be challenged. The second practical issue which comes up is that if your supplier, he was covered under e-invoice, let's presume that he issues IRN, etc., but he doesn't mention QR code. Now, Rule 46 prescribes QR code as one of the mandatory particular for tax invoice, which is relevant from a supplier perspective. Now, Rule 36 deals with the documents on which ITC can be availed. So, proviso to Rule 36 sub Rule 2 is in the form of a relaxation that if few mandatory particulars are mentioned on invoice, those are sufficient for claiming ITC. So even today, those does not mention QR code. Therefore, in our view, even if QR code is not mentioned because it's not one of the mandatory particulars for claiming ITC, so ITC can be validly availed. Coming to recent news and changes, so the government is increasing the ambit for mentioning of HSN code. So the government has listed 49 category of goods on which 8-digit HSN code needs to be mentioned on tax invoice. The government amended Form GSTR 2A. So even the details of bills of entry can be seen from a recipient perspective, whether ITC is availed or not. The government is bringing a new scheme, QRMPS, which is quarterly return and monthly payment scheme for taxpayers whose turnover is less than 5 crore. So this is effective from January 2021, and this is how the scheme will work. So let's take for example from January to March 2021. So for January transactions, in the month of February, the supplier will be having a facility which is called IFF, which is invoice furnishing facility. So he will report its invoices. The cap is 50 lakhs per month between 1st to 13th. So those will be auto populated in GSTR 2A and 2B of the recipient, who can be a large supplier. By 25th, he needs to make the payment of tax on estimated basis through PMT 06. Similar system will happen in March as well. So once a quarter ends, by 13th of April, he needs to file his GSTR1. He needs to include all the invoices which may be for the month of March and which were earlier not reported. And depending upon the state, etc., by 22nd or 24th, he needs to file GSTR 3B. So just to clarify and why we put this slide was that many of you may be procuring goods from taxpayers whose turnover is less than 5 crores. So from an ITC perspective, there will be no deferment in availment of credit, and the government has clearly envisaged that on a monthly basis, your suppliers can report their invoices. On customs side, the government is planning to introduce a sunset date by which higher import duties will be imposed on mobile phones, televisions, etc. So the government will come up with a phased plan so that the local manufacturing can be boosted. RODTP scheme, the government is starting with ready-made garments, iron, steel, and auto components. As per yesterday's news, so initially the government was planning that MEIS will end in December and RODTP will start with January. There is likely to be a deferment by 3 months. So it is likely that MEIS will continue till March and RODTP will start from April. And Gujarat High Court is a pioneer, and it's the first court which has begun live streaming of court proceedings on YouTube. Now we'll come to the legal precedents, and over to you, Ayush.
Thank you, Puneet. So, in our legal precedent section, we will be covering wide range of case laws ranging from Supreme Court to the advanced ruling authorities, which covers the famous issue of Malabar Paratha, the mode of service, various guidelines for installation of CCTV cameras, and so on and so forth. So, coming on to the first decision, in the mode of service, since the lockdown has been imposed, the Supreme Court had been very lenient in the way that it had been taking up issues which has been faced by the litigants and the SSCs. Like in the March, they have issued a suo motu order where the limitation has also been extended to a further date. Similarly, recently in the case of in suo motu writ petition, issue was taken up regarding service of notice, summon, and exchange of documents, where the department followed the conventional method of issuing and serving notice and summons through the postal method. So the issue was raised before the Supreme Court that it is becoming impossible for the department to travel to the postal department, and there is a delay which has been caused. So Supreme Court issued a guideline that the service can also, no matter what the provision says under the different laws, service can also be made through email, fax, and commonly used instant messaging services such as WhatsApp, Telegram, and etc. However, the Supreme Court added a caution that if the notice is served through the instant messaging services such as WhatsApp and Telegram, then communication through email will be mandatory. In the case of General Pipes, the goods were confiscated. The order was issued. The show cause notice was issued. The penalty and the amount the was deposited by the petitioner. However, the service of the order regarding payment of tax and penalty was not served on the SSE. Instead, the order was served on the driver. When the order was finally received by the SSE, they filed an appeal which was rejected on the ground that the appeal has been filed beyond the condonable time period, that is of 3 months. The petitioner challenged the order before the High Court on the ground that the Section 149, Section 169 provides a particular mode of service. Those modes of service provide that the order should be served upon the aggrieved person. In the present case, in the cases of e-way bill, the aggrieved person is not the driver of the vehicle. Instead, it is the SSE. Hence, the service, if it is not made on the aggrieved person and made on any other person, then it will not be considered as a valid service. To the contrary, in the case of Kothari Associates, on similar set of facts, the High Court held that there was no condonation of delay in filing appeal if communication of order is accepted. So in this case, Kothari Associates, on the day on which the order was issued, deposited the whole amount towards the tax and penalty. The High Court noted this fact and held that if the tax and penalty has been deposited on the same day, then it is assumed that the driver has given that order to the Kothari Associates, and if any delay in filing the appeal will not be condoned. So, on this ground, the High Court held that the order is validly served on the petitioner. In our view, the Kothari Associates ruling is incorrect. The General Pipe's decision laid down the correct position of law, where it held that the order should only be served on the aggrieved person. It is if it is served on any other person, then it will not be considered as a valid order. In the case of Sri Sham Baba edible oils, the issue before the MP High Court was validity of show cause notice or order which is not uploaded on the GST portal. So apart from section 169, rule 142 prescribes that any order or the show cause notice should be issued electronically. So there's a particular mode of service which has been prescribed under rule 42, 142. That mode was not followed, and instead it was served through email. So the same was challenged before the High Court. The High Court held that the only mode which CGST rules prescribe for communication of show cause notice or the order is by uploading them on the portal. The High Court held that when a particular procedure is prescribed, other procedures stand excluded, and the High Court struck down the show cause notice and the order. In our view, this judgment is correct. When a particular mode has been prescribed under the rules, that particular mode should be followed for serving of order or show cause notice to the SAC. Also, it is important to note that in multiple rulings, the High Court has highlighted that if it is uploaded on the common portal, then it will be considered as a valid service. Hence, it is advised to all the SSCs that they should regularly check on to the common portal for any order or show cause notice, as there is a particular timeline which has been provided under the Act and rules for filing of appeal. If order is served on the common portal and appeal is not filed on time, then the appeal will be time barred. Hence, it is advised to check common portal regularly. Coming on to the next set of rulings, in the case of Paramveer Singh Sahani, the High Court issued directions for installation of CCTV cameras at investigating agencies' office. So the issue of judicial violence at the time of investigation is commonly known to everyone. The cases have been reached up Supreme Court and High Court on multiple occasions, where the High Court and Supreme Court have issued multiple guidelines that what should be procedure that should be followed during investigation. Despite of so many guidelines issued, the same has not been followed by the department. Hence, in the case of Paramveer Singh, the Supreme Court issued a series of guidelines for installation of CCTV cameras at every investigation agency which carries out interrogation and arrest. So they directed for formation of state level and district level oversight committee. They also said that CCTV cameras should be installed at every investigating agency that has a power to arrest. Hence, this will also cover multiple agencies under GST and customs such as DRI, DGCI, which issue summons and record the statements. The Supreme Court directed that the authorities to submit a comprehensive plan within the period of 6 weeks. In the case of Agarwal Foundries, the department conducted search and investigation of the house and the business premises of the SSC. During the search proceedings, there was reported physical violence against the petitioner and the various employees. It happened at such a level that the petitioner's left leg was broken, and there is a medical report in this context. The FIR was also filed by the petitioner, but no action was taken. Hence, the petitioner directly moved to the High Court. The High Court examined all the evidence and the medical report and said that there is a prima facie evidence of use of violence by the department against the petitioners and their employees. The It is important to note that the investigating authorities started search in the morning, and it continued till midnight. The summons were issued at 12 in the midnight for the SSC to appear at 12:30 in the midnight before them. On these facts, the High Court held that detention till midnight amounts to violation of personal liberty, that is Article 21. And that the High Court further directed that the interrogation should take place only during the daytime, and it should not be taken during the night time. There was a request from the SSC that during the examination, the lawyer should be present with the SSC so that no incidents of violation can take place. However, the High Court refused, partially allowed that the lawyer can be available at a visible range. Uh, in the case of PV Rao, the petitioner was an aged person of 57 years. He was also diabetic. So where summons were issued, he was based out of Bangalore, and summons were issued for him to appear in Delhi. The petitioner requested that the interrogations could also be carried out through video conferencing. However, the request of the petitioner was rejected. The petitioner approached the High Court. The High Court rejected the request of the petitioner as well on the ground that at this stage judicial interference at investigation must be exercised with circumspection. Merely because travel from Bangalore to New Delhi would involve risk of contracting COVID-19, balance of convenience would not lie in favor of the petitioner. Mere apprehension of contracting COVID-19 cannot be a basis for granting relief sought by the petitioner. In our view, the High Court could have allowed the Supreme Court has taken multiple steps for allowing the hearings through video conferencing. There are multiple examination of witnesses which happen through video conferencing. The High Court could have easily allowed the recording of statements through video conferencing, taking into consideration the condition of the petitioner. Uh, in the case of skill lotto solution, the issue before the Supreme Court was levy of GST on lottery, betting, and gambling. So, skill lotto solutions was based out of Punjab and engaged in sale of lotteries. Uh, so they challenged the constitutional provisions uh, on the basis that the definition of GST also covers goods and also includes actionable claim. Their contention was that the definition of goods in the Constitution provides only for material commodities and articles. The Supreme Court held that the definition of goods under Constitution is an inclusive definition and does not exclude actionable claim. The inclusive definition of that is provided under the Constitution is enlarged meaning of words and phrases used in the definition, and there is no violation of any constitutional provision nor any discrimination in taxing lottery, betting, and gambling. In our view, this decision is correct. Reason being that the definition of goods under the Constitution is an inclusive definition. It does not anywhere exclude the actionable claim. If the definition is wide enough to encompass the actionable claim, then the CGST, then the Parliament had a power to include actionable claim within the definition of goods under CGST. Then, in the case of Sutherland Global Services Limited, the issue before the High Court, Madras High Court, was regarding the transition of credit of cesses. In this regard, we have recorded a detailed legal monologue which is available on YouTube page. You can refer to the link for the same. So in this case, the issue was regarding the transition of cesses, which includes education cess, secondary higher education cess, and Krishi Kalyan cess. Section 140, which provides for the transition of cesses, contains no restriction regarding the transition of cesses. Section 140 subclause 1, Section 140 subclause 8 contains no such restriction. However, the department had been taking this stand since the beginning of the GST that transition of credit of cesses is not allowed, basis the explanation which is not applicable. When the same was denied to Sutherland Global, they challenged this before the Madras High Court. The single judge bench gave a favorable decision allowing transition of cesses to Sutherland. The same was challenged before the division bench of the Madras High Court. The division bench of the Madras High Court overruled the single judge bench decision. In their view, credit is in the nature of concession and facility and not a vested right. Hence, character of cess is different from duties and taxes. The cross utilization of credit of cesses is not permitted under the earlier regime. Hence, the same if transition to GST, this then it cannot be allowed. The court also held that the accounting entry of credit of cesses post 2050 does not grant vested right for transition of credit of cesses. The High Court also held that transition of credit only allowed for legislation which is subsumed under the GST. The High Court further held that in the initial part of the decision, the High Court held that the taxing statute should be read strictly while interpreting whether its credit is a concession, vested right or not. However, in the later part of the judgment, the High Court held that the explanation 3 to section 140 should be read harmoniously with section 141 and subsection 140 subclause 8. Section 1 explanation 3 to section 140 basically excludes transition of credit of cesses. However, the expression which is used under explanation 3 is eligible duties and taxes. That expression does not found anywhere mentioned in subsection 140 subclause 1 and subsection 141 clause 8. However, even though this expression does not found anywhere mentioned, the High Court held that the explanation 3 should be read harmoniously with section 141 subclause 1 and 8, and credit cannot be allowed to be transition. In our view, this judgment is incorrect. In our view, credit is a vested right and not a concession. In 2015, when credit of cesses was discontinued, there was no lapsing provision which was created in 2015. When the GST was brought into force, even then no lapsing provision was created under the earlier regime or under GST, and there was no restriction which was created under section 140. Hence, transition of cesses should have been allowed. Another decision was passed by Gujarat High Court in the case of Cosmo Films, where the issue was regarding refund to advance authorization holders. In this regard, we have again recorded a detailed monologue explaining the background of the transaction, the Cosmos Films decision, and the way forward. You can refer to the link for a detailed video. So in this case, the issue was that in September 2018, the retrospective amendment was brought in force, wherein the advance authorization holders exporting goods were disallowed refund if they have not paid IGST on imports. There was the exporters filed multiple representation before the authorities. After representations were filed in the October 2018, a circular was issued and the rule was again amended, where they said for the past period, even if if IGST is not paid on imports, on exports refund will be allowed. However, for period post October 2018, refund will not be allowed to advance authorization holders if IGST is not paid on imports. The In Cosmo Films, the petitioner challenged the notification which was issued for the period post to October 2018. However, to the surprise of the department and the SEC both, the court held that the October 2018 notification which created for a restriction post October 2018 will be applicable retrospective with effect from October 23, 2017. The basis of the High Court decision was explanation to Rule 9610, which allowed output state refund where IGST exemption is not availed. and introduced with retrospective effect. The resultantly, the output stage refund will not be available if IGST exemption is availed from October 23, 2017. Taxpayers are required to pay back the refund with interest and claim ITC. In our view, this decision is completely incorrect. There is a circular and a notification which clearly says that the notification is applicable prospective only, that is post October 2018, and not applicable retrospectively. And even that was not the contention of the petitioner or either the department before the High Court. Uh, In the case of Ravinder Singh Chaudhary, the issue before the High Court was GST on the fantasy game. So this is a public interest litigation where the Dream 11, wherein there's a fantasy game website which is run by Dream 11. The contention of the petitioner was that it is a gambling activity and not a fantasy game. The High Court examined the earlier decisions and held that outcome of the fantasy game Dream 11 is not merely determined by chance or accident but skill of the participant. Fantasy game involves substantial skill. Business activity is protected by Article 19(1)(g) of the Constitution. Such game is not a gambling or a betting, and the same has been accepted by the government and the GST department. The GST department is to if there's any issue regarding the classification, GST department will take up the same. In case of Shirdi Sainath Industry, the issue before the High Court was inclusion of value of byproducts for valuation of job work services. Shirdi Sainath was a job worker, and they were milling rice in the factory. On milling of rice, there were certain byproducts which were generated. On the byproducts, the department said that the value of the byproducts is required to be included in the value of taxable services. Show cause notice was issued, order was passed, and the demand was confirmed. The order was challenged before the High Court. The High Court said that the job worker is allowed to retain byproducts under the contract. Byproducts form part of the compensation and it is not a consideration. Hence, value of byproduct is not liable to be included in assessable value of job work services. In the case of Sun Dai Shem, the issue before the High Court was that the SSC filed GSTR 1 in the month of in October 2017, where few intrastate supplies were reported as interstate supplies. They requested for correction of the same. However, the correction was denied. The correction was requested in August 2017. The correction was denied on the ground that the cutoff date for amendment is March 31st, 2019. The petitioners challenged the rejection before the High Court. The High Court examined the various provisions of the CGST Act and rules. The High Court held that the CGSTR 2A and GSTR 1A that would have enabled the customers to timely identify the error and communication to the petitioner was not notified until March 31st, 2019. Hence, in absence of enabling provision, petitioner cannot be deprived of the legitimate right to avail ITC. Hence, the High Court directed the revenue to allow petitioner to resubmit GSTR 1. This is one of the important rulings in the case of urbanized developers. uh, the the ITC was availed beyond the prescribed limit. So when ITC was availed beyond the prescribed limit, the electronic credit ledger was blocked by the department. When the electronic credit ledger was blocked by the department, the urbanized developers filed a writ petition before the Supreme Court against the order of blocking of electronic credit ledger. The High Court held that Rule 68A of the CGST rules allows blocking only for the reasons to be recorded in writing. In the present case, the department has not produced any reason for why the blocking of credit has taken place at the. Therefore, the blocking of credit is invalid. And the High Court held that the authorities are to decide representation of the SEC within 6 weeks. In the Wayanar homes, the issue the before the High Court was whether the proceedings under the which have been issued under the issued in 2020 for demand of service tax is valid or not. The High Court held that the central excise officers are deemed to be officers of the CGST Act. Section 174 provides that investigation, inquiry, verification may be instituted, continued, or enforced. So, if any new investigation is instituted, it will be valid in terms of Section 174 of the CGST Act, and revenue can initiate fresh proceedings post advent of GST. Since the advent of GST, there have been multiple issues where multiple representation have been filed by the SSEs before the CBIC. However, the CBIC had not been deciding those representations, and the SSE have been facing the same issue for very long. Similar representation was filed by Dish Infra before CBIC, and since no action has been taken on the representation, Dish Infra challenged the same before the High Court. The High Court directed that the additional representation is to be filed by Dish Infra, and CBIC should decide representation within 8 weeks. The SSEs can take benefit of this decision where if a representation has been filed before the High Court and the same has been pending for very long before the CBIC, they can approach the High Court if the High and the High Court may issue directions to the CBIC for deciding their representations. In the case of Sanjeev Kumar Mittal, the issue was regarding recovery of service tax from director. So a demand was raised in the year 2015 against the company. The the show cause notice was issued and the order was passed. However, the company refused to accept the order. Hence, two more orders were issued, of one against the director and one against the company for attaching of the bank account. The attachment of the bank account by this director was challenged. The contention of the department was that if the funds of the company are lying with someone else, then the accounts can be attached. However, the High Court held the Finance Act of 1994 allows attachment of funds lying with the third party. Here, in the present case, no funds are lying with the director of the company. The High Court also held that the director and the company are separate legal entities. There is no provision under the service tax law for attachment of property of directors. From here on, Puneet will explain the other cases.
Thank you, Ayush, for covering Supreme Court and High Court rulings. Now coming to other rulings, and we'll quickly cover through because we are running short of time and there are many questions also. On AAAR, the first ruling is IZ Cartex. Uh, in this case, the services were provided by the foreign entity and it had an India branch office only for receipt of payment. So AAAR held that it will not qualify as fixed establishment. It will be considered that the services are provided by the foreign entity to Indian customer, and Indian customer should pay GST under reverse charge mechanism. Now this whole classification or rate of GST on paranthas, in this case of modern foods, whole wheat and malabar parantha was under consideration. So the court held that this khakhara, chapati, roti, these are cooked preparations, whereas the parantha required further processing. They classified it under 2106 and held that 18% GST is applicable. In our view, this ruling is incorrect. These products clearly qualify as bread and therefore the rate of GST should be 0 only. Coming to advanced rulings, Toshiba India, whether the GST is applicable on merchanting sales. So the authority held that GST is payable in respect of import of goods when import declaration is filed with custom authorities. In case of merchanting sales, goods are not physically brought into India. These are akin to high seas sale, and hence GST does not apply. Maninder Singh, it's an advanced ruling, important ruling. In this case, the taxpayer was constructing pipeline in Bangladesh uh, for a customer who is located in India. Uh, for construction of immovable property, place of supply is location of recipient of service. The authority held that there is no deemed export provision for export of services. So, because a customer is located in India, even if place of supply happens to be outside India, it's a works contract service attracting 18% GST. The next ruling is on the job work ruling. So in this case, the taxpayer was getting waste which was dumped by foundries, and it was undertaking processing on that. So the authority held that it's not a job work activity. Uh, uh, in this case, after processing, a new product is emerging. Therefore, when the taxpayer is supplying the new product, which is sand, it will attract 5% GST and not under job work category. Very important ruling, Bumer India. So in this case, the taxpayer was giving transportation facility to employees. In some cases, it was on free of cost basis, and in some cases at concessional price. Uh, the authority held that Schedule 3 of CAGST Act only covers transactions from employee to employer and not vice versa. They held that furtherance of business is wide enough to cover any supplies in connection with business. They held that employee and employer are related parties under GST law. Therefore, even if consideration is absent, GST will apply. In our view, this ruling is incorrect on two counts. Wherever the transportation facility was provided on free of cost basis, in those cases, it was a condition of employment from employer to employee, and it was not a supply at first place. Secondly, wherever it was done at a concessional price, in our view, open market value concept does not apply. It's a arm's length transaction, and therefore GST should have been paid on the actual recovery amount only. A couple of important service tax rulings is all automotive dealers and other FMCG consumer durable company dealers. They are facing this issue of service tax on discounts and incentives. The department's contention is when they get discounts, incentives through credit notes for target discounts, etc. This is for a service. They also say that it's a declared service, being obligation to do an act. So, tribunal, this is the first ruling post July 2012. The tribunal held that it's a principal transaction between dealer and OEM. Dealer is not an agent of OEM. There's no sales promotion. Whatever everyone is doing is for their mutual benefit only, and therefore service tax does not apply. Gammon India, it was on applicability of service tax on uh, mobilization advance. So in this case, the tribunal held that GST is not payable. On custom side, interglobe aviation, it's an important ruling. In this case, the exemption for reimport of parts, aircrafts, etc. It only covered duties of customs. The tribunal held that duty of custom does not covers only duty of customs under Customs Act, and therefore IGST is not leviable. With this, we come to end of today's roundup, and there's a chat box. There's an option for raising your hand. We'll be happy to take any of your live questions. We'll unmute you. You can ask your question, and we'll answer your question then and there only. So, if you have any questions, please feel free to ask. You can raise your hand. So Mr. Pramod Jha, we are unmuting you. You can ask your question. Mr. Pramod Jha, you can unmute yourself and ask your question. Mr. Pramod Jha, we have unmuted you. You can also unmute and ask your question. No, in between it was there. D. Up. No. Mr. Dayanand Yadav, we have unmuted you. You can ask your question.
Hi Puneet, my question is related to e-invoicing government because implemented from the 1st October for more than 500 crore companies. There still have issue on the government portal, IRP side, e-bill portal. So there we frequently face for IRP not connected with the e-bill portal, the e-bill are not generated, or an other type of issue, IRP get down, or the third party tool are always involved in this cases. The third party, there's another challenge for industry. So is there any plan to government to provide any sort kind of window or solution for to avoid any business disturbance for 1 day, 4 hour, we can regularize the invoice on next day?
So, Mr. Dayanand, your question is valid. These are the teething problems all the companies are facing. In my view, in next couple of months' time, things should stabilize further, and except for this NIC portal direct generation, in my knowledge, there is nothing else which government is planning from a solution perspective. So very frankly, you need to engage a third party for this.
So Puneet, the third party is always engaged by all corporate. We are also tied with the big four company, but ultimately the solution for short time frame are never happen because all have the big player. If they are unable to provide solution to corporates, so who can provide the solution? So government think about that. Yeah. If there is 4 hour downtime, it will a cost of million of INR for one company, one corporate. So how can they announce the impact without analyze the fact on the ground? So that's my question: is any representation through the industry body to government? They allow the window. If any fault during the e-invoicing, they can regularize on the next day or they can amend the invoice.
Right. No. So Mr. Dayanand, your point is valid, and in my view, the situation will become more tough from January because much more number of taxpayers will come up. So their portal capabilities need to be at least 4 or 5 times. So, but yeah, frankly, I do not have any answer to it, nor I think that the government is doing anything on this.
So only finance manager have option to ask to our GM to ready for bear the loss.
True.
During the downtime.
Right. Yeah, thank you, Mr. Dayanand. Mr. Chamaraj URS, we are unmuting you. You can ask your question. Mr. Chamaraj URS, you can unmute yourself and ask the question. Mr. Chamaraj URS, okay. Mr. Manish Rami, sir, we are unmuting you. You can ask your question.
Yes, my question is the government has mandatory in invoicing for 100 crores company and QR code is compulsory. Then how can the beneficiary in the sense of getting ITC, how can we judge the companies need to compulsion QR code?
Mhm.
How can we know the QR code is compulsion for supplier?
Mhm. So Mr. Manish, you might have heard in the presentation also, I also highlighted that there is no full-fledged or concrete way of doing this. Uh, See, one way is that firstly you need to assess whether your suppliers are legally required to issue e-invoice or not, which can be done from government's portal or taking declarations from them. And secondly, if he's covered, then through QR code you can assess whether he has IRN or not. Otherwise, there is no other way of checking whether he has generated IRN or not. So that's what I highlighted also, that there is no proper facility or way the government has provided to recipients to check whether their suppliers are issuing proper invoices or not.
Thank you.
Yeah, thank you. Mr. Pramod Jha, we have unmuted you. You can unmute yourself and ask a question, Mr. Pramod Jha. Mr. Sachin Agarwal, Mr. Sachin Agarwal, you can ask your
Hi,
question.
hi Puneet. Good afternoon.
Hi, good afternoon.
Puneet, yeah, I want to ask one question regarding the export of services. So I want to ask, like, if educational institute located outside India conduct examination in India, and the student registered themselves on the portal provided by the education institute located outside India, then actually we are treating the same as export of services. But my one question here is, if Indian government like Indian government want to pay for example one student fees to the education institute located outside India, so will it make any difference regarding the treatment of export of services, or will the RCM angle or something taxability comes into picture?
Mhm. Mr. Sachin, you have very specific question. I suggest you can mail it
Okay,
to us and we can take it offline. It's a bit
sure.
complicated. There have been advanced
Okay,
rulings also on this. We can take it up offline.
definitely, Puneet. I will mail. Thank you
Yeah,
so
thank
much.
you. Thank you, Sachin. Mr. Amir Nafis, we are unmuting you. You can ask your question. Mr. Amir, Amir Nafis, you can unmute yourself and ask a question. Just go below. There are one or two more. हाँ एक मिनट ऊपर 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 और yeah, that's all from our side. There are no more questions. So again, we thank you for joining in large number and wishing you a very happy new year. We'll come up with the next Roundup edition in 2021. Thank you once again.
Thank you.